And welcome to the OANDA Market Pulse charting analysis video. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, in today's video, we're going to take an overview of the charts. Really, it's been a few weeks since our last video, so I just basically want to take a look at how the market's been performing since then through that low liquidity festive period, and really see how that affects our outlook or gives an update to the previous outlook that we did. Now, we'll focus on the three major currency pairs, WTI and gold today, and then we can, of course, as the week progresses, look into a few others as well. Now, euro dollar really hasn't changed over the past few weeks. You can see here, if we just zoom in on this chart, you can see that really it remains range bound between really 108 and 110, which was the levels we highlighted previously. I think this kind of consolidation is to be expected really in this pair at the moment. We've just had the first rate hike from the Fed, just had some easing from the ECB, so the markets tend to take a little bit of time to really find the feet following such big decisions. So fundamentally this wasn't a surprise, but from a technical standpoint, what we do is we just find ourselves range bound. Now, for some people these are not ideal markets, for others some people enjoy the range bound conditions, especially when you've got such clear boundaries such as this 108 support, which has provided support on the last three occasions that's been tested. Now 110 is a less obvious resistance level to the upside, but I still think it is a clear boundary. 110 to 111 is what I always highlight as being a clear resistance for me in this pair, and this continues to be the case. On the most recent attempt to break above 110, we did find resistance and pull back towards these 108 levels, so this for me reinforces this trading range in euro dollar. Cable, we have seen a bit more selling in this pair. It's been a little bit more active than euro dollar. We have seen some more negativity really in the pound, and you can see here what we were seeing prior to this for the second half of the year really was this gradual decline in the pair, and that seems to have gathered some pace in the past couple of weeks. So we've had this descending channel which is broadly traded within, and now we've seen a break below this descending channel and a close below as well, a very bearish Marubozu candle that we had here last week, and already today you can see that we have seen some upside pressure in cable, really testing the Marubozu line, the midpoint of or almost testing the Marubozu line, the midpoint of this Marubozu candle, before retreating back again towards these lows. So really again this is quite a bearish signal here, and again based on this we've got this current support around 147, but it wouldn't surprise me to see these 145.50 levels support tested in the near term, especially given the fact that we've seen really a pickup in the bearishness in this pair at the moment. Now, if we move on to the daily chart, again this really does just support what I've just been saying. The moving averages don't really offer anything new, given the fact that they are all to the upside, so we're not seeing these tested as areas of support at this current at this moment. But I think 148 to the upside could be a notable level of resistance, as we've already seen today. Of course, prior level of support, the bottom of that descending channel that recently broke below, and also the Marubozu line of that weekly Marubozu candle as I've highlighted. So I think 147, as I've already highlighted, is going to be very key now for the pair before we potentially see last year's lows around that 145.50 level being tested. So really not much to be gained from the daily chart that we can't already see on the weekly chart. Dollar yen, the final currency pair that we'll talk about, and again we have seen some bearishness in this pair. Really what we're the broad story that we're seeing at the moment across many currency pairs is a weaker dollar at the start of this trading week and at the start of this trading year for that matter. Dollar yen, we are seeing it pull off this week. We had this prior support around 120, of course that's a key psychological level, and a prior level of support and resistance, as you can see previously. You got this small range really between 120 and 120.50, and as you can see we broke through that today. Now that opens up a move back towards these 118 to 118.50 levels. Again you can see this period here between March and May when this 118 to 118.50 was a key support, barring this one move that we saw back in August, which was, of course, when we saw that market volatility coming from Asia. We did see that 118.50 to 118 level being providing substantial support again in September and October, and that appears to be what we're seeing again now. Now, of course, if we see a break below here, then I think we could see potentially move back towards these 116 levels, and again, well, 115.50 to 116 levels. Again, you can see that the common theme really in these yen pairs is you tend to see a band band really of support and resistance, and it tends to be over the course of around 50 pips. The 50s and zeros tend to be quite reliable, or fairly reliable support and resistance levels. So here 115.50, 116, 116.50, and so on and so forth. But here we'll also have the 89 week simple moving average potentially offering further support. Not been entirely reliable during this period, but we did see sideways trading prior to this. During the decline, we did actually see it provide some resistance along the way, so we could potentially see it offer some support around these 115.50 to 116 levels. Once again, the daily chart is really just confirming what I've just highlighted here again, given that these 118 to 118.50 levels were prior support, and again we're seeing similar occurrences. Once again, we may see some consolidation in the pair, but I guess we've got to look back to the 4-hour or 1-hour charts to get an idea really of what this consolidation is. Is this consolidation because the pair's bottoming out, or is this purely is this just consolidation before continuation of the downtrend? Really, the 1-hour chart isn't really offering too much for me at this stage. This looks like a bearish continuation, but there isn't really a clearly defined pattern at this stage, given the fact that we've only got one high being made since, one higher high and one higher low being made since. So we may have to see how this continues over the next few hours. But for me, this is a very bearish candle back towards the support, and I think this could potentially just offer some form of temporary relief here for the pair. WTI next, and again, what we've seen a bit of a rally over the last few days. Well, I'll say rally. For me, I think this again is just consolidation or a minor correction. You can see here that we are trading once again at multi-year lows. Here a few weeks ago we did hit lows around $33.90, $34 a barrel in WTI. We are seeing some form of consolidation or minor correction, but we are back at these prior lows that we saw back in August. We're still in this downtrend, as you can see from this descending trend line, which dates back to June 2014. Next level of support comes in around $32, as we've highlighted in previous videos. Taking a look at the daily chart, I think this looks a little bit more clear in terms of the consolidation that we're seeing, because you can see these higher lows being made, but again higher highs being made as well, which suggests to me this is maybe a rising wedge or a flag formation. Again, these are bearish continuation patterns, just representing consolidation or small correction in the pair. This prior support between 38 and 37. 37.25 to 38, which was support previously, continuing to provide resistance. If we see a break above $38, then that may suggest we're going to see a move back towards these $39.50 to $40 levels. But again, at this level, you do tend to get I would expect to see a lot more resistance. Price support, but we've also got that descending trend line, which I also highlighted, and potentially some moving averages coming into play here. The notable one on here now being the 55-day simple moving average. And again, during this period of sideways trading, the moving averages tend to be less useful as an indicator of support or resistance. But you can see if we go back here, it has been quite a fairly consistent level of support and resistance previously, and therefore, although it's not guaranteed, of course, this could provide additional resistance, especially if the outlook for WTI in the market's eyes continues to be bearish. Finally, gold, and again we are seeing this really trade sideways at the minute, so there is no change from a couple of weeks ago. We are still trading in that range between 1050 and 1100, no change there at this stage. We are seeing a bit of a bullish start to the week, but again I think that is predominantly coming off the weaker dollar that we're seeing. If we see this 1088 to 1090 level broken, then that may suggest to me that we are going to see a broader move to the upside, a broader correction, because I do still in the longer term remain quite bearish on gold. But you can see this 1080 to 1088 to 1080 to 1090 level historically at least over the past 12 months has been quite a notable level of support and resistance. Support throughout July and the start of August, resistance really since it broke back below here in November. On a number of occasions we have seen it offer resistance, at which point we have seen a move back towards these 1050 levels. So if we see that broken, then maybe back to 1100 in the meantime, and then potentially beyond if we can see a push above here. But at the moment I think 1050 to 1080 seems to be a key region for gold, which it's struggling to break out of. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA FX Labs, which has a lot of great tools designed to help you in your trading.